Good morning, fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market prep video for April 9th, 2025. Well, hey everyone, I want to apologize for yesterday. I hate letting people down. I had a little bit of a health issue. I suffer from very low blood pressure, and I struggle with that a little bit, and yesterday was particularly bad. I was kind of sick yesterday, but feeling much better here this morning. Still a little bit on the low side, but feeling much better. So everything should be a normal day today, if there is such a thing as normal in this wild and crazy market that we are living in at the moment. So, how about we take a look at some of the things that happened overnight here to get us started. If we take a look, Asian markets mostly lower last night, but there were some bright spots. Shanghai went up by 41 points or 1.31%. Hong Kong was up pretty nicely, 136 points or 0.68%. But after that, we saw South Korea lower. India was lower by 136. Nikkei continuing to fall sharply, down 1,298 points, and Australian markets lower as well by 1.8%. If we take a look at European markets this morning, well, they are decidedly bearish here once again. The DAX is down 618 points or 3.05%. FTSE's down 223, 2.82%, and the CAC is lower by 211 points, down 2.98%. U.S. futures have been improving this morning since I got up. Right now, Dow futures are down 320 points. They're still trying to push to the upside. We have S&P 500 futures are down 25 points, and the NASDAQ futures are flirting with getting into positive numbers. In fact, just ticked into positive numbers and then ticked right back below. So we're flirting with a flat line here, just bouncing back and forth. Again, improving on the morning so far. Let's take a look at what we've got going here in some other markets here this morning. If we take a look at bonds this morning, our bond yields hanging in there. 2-year bonds are at 3.87%. The 10-year bonds are at 3.38%. And the 30-year bonds are at 4.86%. There's a little bit of fluctuation in those this morning. If we take a look at the U.S. dollar here today, U.S. dollar is weaker this morning. Right now down 73 cents on that U.S. dollar, so keep an eye on that. We've got a little bit of support right in this area. We'll see if that holds again. We might come on down to this lower level right in here of support. We'll want to be watching that though, because we've had quite a bit of weakness coming into that U.S. dollar. If we take a look at oil this morning, we've got oil moving lower here at the moment. Oil is down actually really sharply, $2.37 an ounce. We are coming in at 57.20, not an ounce, a barrel. We're coming in at 57.20 a barrel this morning. Brent is down 261. We're at 60.21 a barrel, and natural gas that had a really rough day yesterday is bouncing up a little bit here this morning. Not quite 5 cents, but trying to push up just a little bit here in natural gas. If we take a look at precious metals here this morning, well, those are really moving up this morning. Right now, we've got gold futures up $72 an ounce at $3,062 an ounce on gold. Silver is also moving up sharply. Right now up 60, almost 65 cents an ounce. recovering some pretty ugly days here recently, but we're at 30.35 an ounce. Right at the moment, we've got copper trying to bounce up just slightly, up about 7 cents this morning. Platinum and palladium are also modestly higher. Palladium only coming in up at the moment $1.20 an ounce. If we were to take a look at those crypto markets this morning, well, Bitcoin is trying to bounce back up right at this moment, up $423 a coin, and Ether is pushing higher as well, up $17.50 a coin, but obviously in a pretty bearish slide here on those cryptocurrencies. So we'll want to keep an eye on that. Mostly green though this morning on those cryptos. So far this morning, we have had Delta Airlines reporting. They reported a beat to the upside, but they are suggesting that bookings in 2025 are likely to be hurt by tariffs, and so we'll have to see how that goes. But right now, they're trying to move just slightly higher this morning. Let's take a look. Well, I think that's all for the morning here. So how about we settle in? Let's buckle up. Let's get ready for the Wednesday edition of the Morning Market Prep video. Good morning once again, everyone, and thanks so much for being here. I very much appreciate it. Let's take a look at these charts and see if we can figure out how we might want to approach the market for today. Remember, we want to look at the charts for what they are, not for what we want them to be. We want to look really closely in here and try not to panic on these things. Remember, we're moving toward the beginning of earnings season, which will begin on Friday with those big bank reports. And so it's not unusual to see us in a choppy condition heading into that. The tariffs are throwing a big volatility spike in there along with that, as you guys know. So anything here is possible, but yeah, keep a close eye on that. We could be a little bit on the choppy side here today, and we are improving this morning at the moment. Let's take a look in here. If those bears were to have additional to say today, well, pretty easy to see. We might come back right on down here and retest this level of price support that we tested before. We did bounce through that and then bounced right off of it in a pretty strong move, so we'll want to watch that area in there. If we were to break down below that area, well, you can see the next big area of support down here in the diamonds would probably be down here in this range on that diamond. So watch that carefully. If we were to break down through that area, we could move rather quickly lower. Now, if those bulls can continue to find inspiration here today, well, the first step would be holding these lows and then seeing if we can push up through the close of the candle here on Monday to see if we can break back through that area up here and really get more of a relief rally going. You'll notice right in here, that is this area right across here, also a little bit of resistance that we'd want to try to break on through as we start pushing on higher here in the diamonds. Clearly our technicals here in the charts, ugly. And the hope would be any relief rally would bring us back up through that 500-day moving average. We will want to keep in mind as we continue this process in here, we got a lot of work to do. The 34 EMA is down through the 200, and that 50 is closing in on that 200 very, very quickly. So keep an eye on those things. Let's take a look at our SPY here, SPY. Whoops. Let's get the SPY. SPY also down below its 500-day. And if those bears have anything more to say here, you could see that push right back down here to test support. But you can see also at the moment what's happening since I got up this morning, a pretty good bullish push here. SPY pushing up pretty substantially. So if we can continue that push to the upside, maybe we can stretch up here and test some of those resistance levels and then move back up toward that 50-day moving average in the chart. You can see not a major amount of resistance in the way until we bump right into this area, and that's going to be that little area of contention here to see if we can bump back up through there and then coming up toward that 500-day moving average up in here into that resistance area of the chart. You will want to keep in mind here on the technicals, 34 EMAs down through the 200, and our 50 is right there ready to cross over down. So we're going to create a fairly significant technical problem here in our chart as we start working ourselves back up. And our QQQ, very similar situation, trying to push back up here this morning. Right now, NASDAQ futures are up 95 points, so they're trying to push, and Dow futures are only down 150. We're getting quite a rebound here at the moment. Keep an eye on that. If we can continue this push to the upside, look at this resistance right here in the chart, see if we can get up through there. And of course, if the bears have anything to say, maybe we start testing these lows down here, these candles, and then of course right back down to that low in the chart. Now, once again, we are well below our 500-day moving average in the chart, and we're going to have a little bit of congestion coming up through this area. If we can get up through that area, then we've got to see if we can reach up toward that 500-day. That might be a little bit more difficult. We've got to get through a little bit more of that resistance of price here in the chart. Here again, 500-day moving average getting ready to cross down through that 200. The death cross, not exactly a good technical picture in the markets. And our Russell IWM sitting right here on support. And if those bears have anything more to say today, you can see if we break down through this level in the chart, then we have that chance we're moving down and testing some of these areas here in price support. You can see that transfers right over into here, and so we'll want to be watching that closely if the bears were to get going. If however we can hold this area of support, start pushing back up, well, if we look over here in the chart, we do have quite a little bit of resistance areas in here we'll have to be thinking about, see if we can start transferring back up. And well, we're so bearish here in IWM. You can see we've got a Herculean effort to get up there through the 500-day. Notice our 34 EMA is getting ready to cross down through the 500-day, and that 50-day is diving quickly as well, creating quite the zone of resistance if we start to rally back up. Let's take a look at our VIX. Now, our VIX still maintaining pretty high levels here, which means volatility is high. Watch for whipsaws. Although we're trying to bounce back up here this morning, couldn't rule out the possibility of whipsaws back down. So watch this carefully here. If those bears continue to have anything to say, well, we could retest this area of resistance up here again in the chart and possibly even break through. And I know no one likes to hear this, but I'm going to go to a weekly in here and show you that we can get worse here on our T2122. Actually, we can get substantially worse if we go back to where we looked at things at the end of 2008 here in 2009 in the market. We could get substantially worse here in the VIX if those bears continue to have any influence to push this market. Of course, if those bears can have anything to say today, well, maybe we can start filling out this little bit of a topping pattern here and start to get a little bit more of an ease back down into here. It'll be important to see us break back down through there, and then maybe we can start coming back and testing some of these levels down in this range of the chart. So watch that closely here. Anything is possible, but obviously we've got some work here to do to ease some of those pressures. If we take a look at our T20s here this morning, our T21-22 indicator, well, we're down here on the bottom, just really hanging out there on that bottom, trying to figure out if we can get something going here to the upside. And you can see if the bears have anything more to say, all we can do is really drag ourselves along the bottom here of the ocean to see whether or not something gets us a little bit of inspiration to bounce. What that does mean, however, is if we get that inspiration to bounce, my goodness, we've opened up a big opportunity for a relief rally. So keep an eye on that. And please keep in mind, guys, be really careful with over trading here off these bottoms, because any pushback up could be just nothing more than that relief rally, and we relieve back up and then we retest the lows. That's a very, very common market pattern where we would pop up off the low, rally for just a little bit, and you'll see the indexes pop up and rally, and then we come back and maybe even test the lows. We could make new lows, or maybe if we're lucky, we get that little higher low in there and we really start seeing the bulls taking over here. If we take a look at our T2108, our T2108, obviously extremely weak. We're down here around 4 in T2108. If we pull this back, you can see that we can go lower here. During the pandemic, we were down here about 160. If I make this a multi-day, go out to a week, you can see we can go lower than that, still down around 148 in here for 2009. So pretty rough here. But hopefully we can get that little bit of relief, and you can see we get that little hooking pattern in here, which gives me that hope that we might catch that little bit of relief back up and see if we can test some of these areas of resistance up here in the chart, somewhere around 10 to 15 in here. Getting back up in there would be a nice move to the upside. T2107, obviously very bearish here as well, but we got that hooking pattern in here on that as well. Once again, I want to show you that we can go lower. In the pandemic, we came all the way down here to 2, and you can see that's very similar to where we were in the 2008-2009 sell-off of the market. So watch that carefully. We can go lower, but this hook in here does give me that hope that we're going to get some relief back up off of this and start pushing back up, and we'll want to start looking for these levels of resistance up in here. Maybe we test up here around the 16 area, possibly a little higher up into the 20% area here of the stocks holding above their 200-day. Catch that little bit of relief. But that's all it's going to be at the moment. In T2101, well, this has been the story here for quite a while. T2101 has been showing us that on the buy wave we've had very little strength, and on the sell wave the bears have had all the breadth. So breadth continuing to stretch to the upside, and unfortunately, guys, this is just a wild market here this morning. We now have Dow futures down 630 points. We've got the NASDAQ futures down 194 points. They were just positive by 100 points. We have the S&P 500 futures down by 70 points. Really a lot of volatility here this morning going on as well. So yeah, keep an eye on that. Let's take a look at our economic calendar. In our economic calendar, we've got a few things to talk about here this morning. First off, we've already got mortgage applications in here this morning, and those mortgage applications coming in, well, pretty strong. Those rates coming down, and so all of a sudden we've got buyers coming in here. We've got mortgage application, the composite index up 20% here this morning, purchase index coming up to 9.2%, and that refinance really pushing at 35.3%, coming up dramatically as we see those bond yields have been falling here in the market. So watch that carefully. Quite the changes here that we have seen in the market, and this volatility remains really strong. Dow futures now down 700 points and NASDAQ futures down 230. So after getting that strong mortgage number really seeming to bring out those bears. Let's take a peek at our economic calendar here a little bit further this morning. After mortgage applications, we're going to get these wholesale inventories here this morning. They're expecting those to be at 0.3%. That's down from the 0.8 last time. Watch that carefully. Petroleum numbers here today, and then of course we've got bill auctions and a note auction here for the 10-year, which would be the most notable, and then of course Barkin speaking today, and at 2:00 p.m. Eastern time today we're going to get the FOMC minutes. As we look into Friday and Thursday and Friday, we're going to have our most notable numbers coming up: the CPI, jobless claims, and of course a PPI on Friday with that consumer sentiment. Those are definitely market moving numbers, and with the volatility that we're experiencing, we have to know that anything is possible. Let's take a look at our economic calendar here for today. In our economic calendar, well, we've got a few things on here. We've already mentioned Delta. We also have reports in here from NEOG. Keep an eye on that. That's moving lower here this morning. And SMPL trying to push a little bit up here this morning. Consumer defensive, which is not a major surprise. Those things have been holding up a little bit better than other areas of the market, so keep an eye on SMPL. This afternoon, we're going to get Constellation Brands, another defensive sector in here, but that's been fading back down, so watch that carefully here for this afternoon. And then PriceSmart will be in here this afternoon. That's also moving lower here this morning, breaking through some support levels. Not looking good. Not a lot of confidence going into that earnings report. Remember, we're moving toward the Friday big bank reports, so pretty low inspiration in today's earnings numbers, and of course there'll be pretty low inspiration tomorrow as well. Let's take a look at some stocks that could be setting up for today. But before we do that, everyone, if you could do me that quick favor, if this is the first time you've seen these videos, please click that subscribe button on YouTube, and also click the bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be useful or helpful, if you could do me that favor, and that would be click that thumbs up button, leave a brief comment. That helps the channel to continue to grow. Thank you so much for everyone who does take the time to do that. I truly appreciate it, particularly in a market like this when it's so crummy. I really appreciate it. Also, one of the things that we have to talk about here today is as we look at these stocks that might be setting up, remember, everyone, they're not recommendations to buy or sell any security. You need to do your own due diligence and be very, very careful here in the market. But that being said, you also want to really work on the discipline and patience. here in this market. This is not my first rodeo with major sell-offs here in the market, and I can tell you one of the major problems that people suffer in here is that fear of missing out. Everybody wanting to buy the market when it's really cheap, or buy a stock when it's really cheap, and then ending up in a situation where we still go down. I remember in 2008, Apple was trading over $200 a share. When 2008 was over, Apple was about $83 a share. And people think, well, there's no way something like Apple can continue to sell off. And there is no rule on that. So remember, be very, very careful. It's perfectly fine to pick up something here in a trade. It's perfectly fine to nibble on something to try and have that hopefulness, but be really careful diving in headlong. And particularly those folks, if you're option traders primarily, these options at these high VIX levels, there is a tremendous amount of theta built into those option prices. And if you jump headlong into multiple contracts, which may be your normal method of trading, that theta can get into your wallet really fast if we can't pick things up and start getting going. So just kind of keep that in mind. There's no shame. There's no shame in standing on the sidelines and protecting your capital. As a matter of fact, one of the best things you can do as a retail trader is make sure you're keeping that hard-earned money protected as much as you can with this kind of volatility and this kind of uncertainty in the market. So that said, let's take a look at just a few things here. One of the things that I continue to go back to, and although they have been pulling back here, good strong dividend pairs, Altria might be a place to look here in the market. A good 7% dividend yield. You guys know I'm holding AT&T on this longer term. I've got a whopper of a profit in here, and that's still working pretty well despite the pullback here in the market. Take a look at things like Verizon, also pulling back, but a good strong dividend yield in here. It's a place that folks will go to find a little bit of safety. So watch some of those more defensive sector type plays here in the market. Things like Philip Morris, things like Kroger, still holding up overall pretty well. Oh, we're just getting breaking news here coming out that China is slapping an 84% tariff on U.S. goods. So retaliatory tariffs from China now in place, and now you can probably understand why we've whipsawed back down here this morning. This is an awful situation here, and particularly if you are relatively new to trading, this is an awfully emotional situation here in the market. So remember, you can take some time off, you can back away. You do not have to put money at risk in a market like this. But I promise you, once this is over, there's going to be great stocks at really good prices, and as long as you don't lose your money between now and then, there's going to be some great opportunities coming in the market, and I'll try to help with that as we move along. And if you need some additional help or things like that, make sure you look us up. Come over to Right Way Options. We have a 7-day trial going on. You can be in there with us for a full month, and I'll do my best to help you navigate this. I have been through several of these big bear market conditions and have been able to, I'll admittedly say my first one cost me a lot of money. But after that, I finally wised up a little bit and realized that, hey, let the market do what it's going to do. And when it's done, it becomes easy to make money. But sometimes you've got to stand on that sideline and be careful. So come on over. I would love to help you in being on the right side of the market when it starts to come around. Other places to So look, guys, we still want to be looking at the things here on the inverse ETFs as we whipsaw. Take a look at like SQQQ, anything in that defensive sector area or inverse area might be a place to look. You can look at things. XLP has just had a really hard pullback here. Those consumer staples overall continuing to fall, but commonly you'll see those consumer staples hold up a little bit better, so it might be a place to start watching to see if we get that relief rally. It might be an easy entry into something like that. But overall, pretty rough situation. Of course, look to those precious metals when we're really nervous in the market. Precious metals tend to hold up pretty well. You can see gold doing quite well here, and you might look at some of those miners as well in here. Take a look at like the GDX, GDXJ. Take a look at like KGC in here. Take a look at Barrick Gold. Things like that might be a better place to park a little bit of money for a little bit as we continue to show this volatility. So with that, everyone, hey, I want to wish you all the best today. I know this is an awful circumstance here for most everyone to be dealing with, and it's going on a little bit longer than we have been trained. The market has trained us over the last, I don't know, dozen years, that every time we move down, then we immediately rebound and zoom straight back up. That's not likely in this situation. In fact, it's much more normal if you go back and study history of the market that after we have a big solid move down here, it takes a while for us to start coming back around. And as a matter of fact, we may not be done with these earthquakes and moves to the downside. Remember, we start hitting these earnings. If those earnings were to disappoint in some places, we may not be done going to the downside. So keep that in mind and go back and study the 2008 sell-off and realize we can have fairly significant relief rallies that only end up disappointing us and pushing us back to the downside. So with that, everyone, hey, I want to wish you all the best today. I want to wish you great results in your trading. Thank you so much for being here. I do apologize about yesterday. I'll try to keep things under control so that you're not missing out here. Y'all take care, be safe. See you back here bright and early Thursday morning. I wish you all the very, very best.